Hi there, welcome to Kneppy Invest and welcome to March 25, 2025. 25 is the number of the day. We have about 25 seconds left of trading today. No, that's a lie. We have about 1 minute and 45 seconds. Actually, that's a lie also because that does not include the closing auction. And as we saw on Friday, last Friday, a lot can happen in the closing auction, particularly if you have fat fingers. And so there's 11 minutes and 30 seconds left of trading today. Even that's a lie because the exact time of the closing auction is anyone's guess. It's random over a 30-second period. Anyway, so we're almost at the end of trading day and we're almost a quarter of the way through 2025. Is that right? Yes, that is right. A disappointing day in the market, apart from tech, which is understandable because NASDAQ had a really good day, a pretty good rally on Wall Street overnight. And I think that was based off what Trump said yesterday, flagging something about not doing as many retaliatory tariffs or something like that. But he's also flagged the possibility of putting tariffs on vehicles or motor vehicles and pharmaceuticals. I don't know why pharmaceuticals, because pharmaceuticals in America are already significantly expensive, massively expensive pharmaceuticals in America, but for some reason they want to do it. They can do whatever they want. Resources down a little bit. Probably the other disappointing thing about today is we've just seen the indices just slide lower through the day. That could be because of Asia. There was some sort of mention in trading economics. Yeah, Asian markets mixed. China and Hong Kong stocks there came under pressure due to widespread profit taking. I don't know how you decide it's widespread profit taking. Did they ask people? And skepticism over the effectiveness of Beijing's latest stimulus measures. I'd say that's more important than widespread profit taking. But what do I know? South Korea's consumer sentiment dips in March. We don't want to see consumer sentiment dipping everywhere. That would be a really bad sign. US private sector activity growth picks up. That's a good sign. So a few good things here, a few bad things here. But yeah, the private sector picking up is actually good, which is interesting. I thought that might have dropped in the United States. Anyway, okay, so the agenda for today's video, after I've gone through trading economics, which I should have done after the agenda, is I'll go through the ASX today. Disappointing day, I suppose. We'll go through the worst. What did I say, West? We'll go through the West and burst of the ASX today, looking at the best and worst performing sectors, indices, also companies. Also have a top 5 stocks of the day. I've done a standalone video on Opthia and their unsuccessful phase 3 trials because that's a really interesting story, in particular the DFA and why that company may no longer exist. For very much longer, even though it has a valuation of $1 billion. So interesting story there. But the theme among the top 5 stocks is small, but 3 of the companies has rallied. In fact, all companies are up today. Yeah, all 5 companies are up, but the top 3 are up by over 100%. I just have to put those 3 companies at the top, even though they're fairly small and not the sort of announcements that I would gravitate towards, but I thought, why not? Nothing else was released today. And then we'll have a look at your comments, in particular focusing on one. Here it is. Quality and growth are completely different metrics. I was thinking of doing a standalone on this, but I'll just do it at the end of this video. So yeah, I'll talk about that at the end of the video. Okay, now on to the ASX today. We're in the closing auction. Yeah, so what can you say? If you have a look at the indices, in fact, the indices have been dropping since about 2 o'clock. So not all through the day. It's only been for the last 2 hours, which is just interesting. So I just suspected, I think suspected is a better word there, that they've been dropping all through the day, which is not true. In fact, tech reaches peak at about midday. So that's when everyone went to lunch. And in that 1 hour when everyone went to lunch, tech just died. So all the brokers weren't buying tech during that 1 hour period. So yeah, it looked like it was going to be an okay day, what I would have expected, but a little bit of selling maybe because of Asia, maybe because of China. Maybe that's right. Best performing sectors, IT, of course, healthcare and real estate, probably Goodman Group. And worst performing sectors, we have staples, utilities, materials, all down by more than 0.4%. Banks, where are banks? All they're down 0.71%. So a lot of volatility in banks. Pretty good day yesterday, another bad day today. Tech up good, gold up. That's a good thing to see. Always liking that. And ASX 20 is actually negative Probably because of the banks. So let's have a look at the ASX 20. In fact, yeah, look at the ASX 20 just collapsing from about 2. It's gone from a 4454, is that right? All the way down to 4420. What's that percentage? I don't know. Anyway, worst performing, no, 12 up, 8 down. So because 12 up and 8 down, and the overall the index is down, either means those companies that have performed badly today have performed really badly, or the biggest companies have performed badly. So if we list this by market cap, we'll be able to see that, yeah, quite a few of the biggest companies on the ASX have performed pretty weakly today, including ANZ down 2.49%. Doesn't sound like they would have gone ex-dividend. Seems like share price would have dropped by more than that. But let's just check. Who knows? Maybe they did. I don't think so, because their reporting season's a little bit out of step with most of the companies. Yeah, so they go ex-dividend in May and November, not in March. So we've got another month and a bit to wait for until ANZ goes ex-dividend. Oh, don't want to have a look at that company just yet. Getting ahead of myself. What was I looking at? Oh, at this. That's right. Some reason CBA is up. Don't know why. So it seems like the drag on the banking sector has been ANZ down 2.49%, which is interesting because if I had to compare all 4 banks, I'd say that's the best value, ANZ, and I'd say CBA is the worst value. So it seems like the investors are going to the biggest, not the best value. Actually, I'd say the investors are going to the best, not the best quality, not the best value. I don't know. And the best performing company in the ASX 20 has been WiseTech. Not surprising. It's because it's tech. It's in its name, tech. And Macquarie Group's had a good day today as well, and also CSL. Okay, now on to the best and worst performing companies. This should be quick because in the top gainers, by percentage change, I'll be talking about the top 3. Saferoads, share price up 363%. Talking about RareX, share price up 175%. Much bigger turnover for RareX, and also the other company, Belararox. Share price there up 108%, so much bigger volume compared to Saferoads, but all companies fairly small with market caps below 37 million. Errolwara, who made a really good acquisition yesterday. I think I did mention I was going to have a closer look at that acquisition. I did not. And it looks like the market has digested that company a little bit further, or that acquisition a little bit more, and they like what they see. Share price up another 46%. Other than that, nothing much here. I did have a quick look at Haranga Resources. They did acquire something, I think. Let's have a quick look. Motherlode, something about Motherlode. I do remember that. Something about Motherlode, and that's the only reason I remember it because, yeah, Haranga secures richest section of legendary Motherlode. And I just love that name, Motherlode. Anyway, I think that's in Africa. I could be wrong, but Haranga is an African explorer. I should have opened it up. I'm pretty sure they are. Oh, this is taking forever to open. Why does ComSec? Why is it so slow? If I open this up in Market Index, it'll be open up in split second. Anyway, oh no, it's in California. There you go. Acquires control of the richest section of the famous Motherlode belt at Sutter Creek, California. I'm pretty sure this is this is an African exploring company. Let me have a look. Oh, there might not be a back section here. Does it really matter? I don't think it really matters. They've acquired a legendary section of Motherlode. All right, let's move on. And I think that's about it, because the top 3 companies I'm going to talk about during the top five stocks part of the video. Best performing companies by market cap. Gold Road is in my top 5. So I'll wait until I talk about that company. Regal Partners has had a nice bounce. Next Gen Energy, they did release something, and that would have been in my top 5 if I didn't go down the small cap route, or maybe the micro cap route is a better thing. So Next Gen did release some sort of drilling results or something like that. So here it is. Yeah, Next Gen announces best ever discovery phase intercept at Rook 1. I don't know how to analyze any uranium hits, but the market likes it. Share price up, what was it? Up 6%. Anything else here? Nothing really else that is. Fleetwood Mac is looking good. So Fleetwood, they had pretty good results. Share price popped up, and I'm just going to have a quick look at the chart. Yeah, not a bad looking chart. With the market, overall market going down the last few weeks, share price of Fleetwood has gone sideways. That's a good sign. Okay, that's about it for top gainers. Let's have a look at the top losers. In fact, no companies in my top 5 are losers. There you go. I'm feeling very positive today. Okay, let's have a look. Fairly small turnover, fairly small companies. A company called Cannindah Resources. I suppose the turnover there is a little bit higher, $418,000. Market cap is 55 million. Share price down 18.3. I would expect this company to have released something today. Probably drilling results again. There we are. Yeah, significant intercept, 71 meters. Is that copper? Is it CuEq? What's CuEq? Is that copper equivalent? I don't know. I'm not an expert in reading these. And again, market is just. I'm going to show you market index. CAE. Still not open up in CommSec. This is how quick it opens up in market index. Well, a little bit longer than I thought it was going to be. CuEq. So it is copper, but also is silver and gold. Yeah, but mostly copper. So I'm assuming that we'll see. What do you see? They put a little asterisk next to CuEq. I was thinking maybe there. I'm just going to Google this. Just so I can be a little bit. Yeah, copper equivalent. There you go. Copper equivalent. Anyway, so market hasn't liked this one. I don't know. I don't really have any history in reading or experience in reading copper grades. I do a little bit in gold, but that's about it. And when I have a look at the gold hits here, yeah, it's not that bad. It's fairly deep though. Anyway, and this high-grade gold is only 1 meter in depth, which it's not much. Okay, so it's Cannindah, Cannindah, whatever. Chart. Ooh, things are going slow here. Maybe if I get rid of some of these. Yep, I'll get rid of some of these. Maybe that's why. Maybe I have too many tabs opened up. This chart is really interesting. I'm really glad I opened this up. See a really big volume, really big spike in volume, 2-day spike in volume back in October. Share price didn't really respond to that spike in volume. So it took a while before we started to see the share price rally. And I think the main reason behind that is because the share price was in a downtrend. So you're going to have a lot of resistance when the share price tries to rally. We saw that in November. Share price tried to rally and then the pullback. And then finally the share price started to rally in February. And that was, or it has been, a successful rally because less resistance. Those who probably have wanted to sold out, a lot of them have already sold out. And the share price rallied. Possible nice little buy the dip situation here, but again, why has the market sold off on Cannindah on these results? The market hasn't liked it. Anyway, so we'll go back to the top losers. And anything else here? No, there's nothing really much else here because, yeah. Oh, Synlait milk is down again, 12.42%. I probably should mention, yeah, I've sold out of Synlait milk. We've had 2 negative days in a row. I've taken my profits. I don't know how the market's going out. I wouldn't be surprised to see the share price rally again or the next few days. But for me, take my profits. It's a nice profit. What was it? It's not quite 100%, but it's close enough. So take profits with Synlait milk. And yeah, again, I just don't know where the share price is going to go after today. So let's have a look at the chart for Synlait milk. Oh, by the way, it also fell through my sell price. Yeah, there it goes. And that could be the trend killer. So yesterday wasn't a trend killer, but this is almost like a trend killer. The other thing is some good volume coming in today. So yeah, for me, this was a trend killer. And a lot of times when I see a trend killer like this, I wait to the next day, but today I just decided to sell. In fact, the share price went to a low of 68 cents. So at least I sold well above the low today. Anyway, so that's, and by the way, I knew it was going to be sold off today because I had a look at New Zealand. And yeah, look at that, selling all through the day. In fact, I was thinking of yesterday when I was selling almost a big beginning of trading. Anyway, Anyway, so that's Synlait milk. I have sold out of that trade, which is good because I'm increasing my cash levels, and it's just coincidence that we are seeing a bit of weakness in the market right now, and I'm increasing my cash levels. Now, the chances are I would have been increasing my cash levels, but I have bought some land and I'm building a house. So I do need a little bit of liquidity. So I do need a little bit of cash because I'm going to have to pay the builders every so often. I don't know what it is, but I'll be looking at in May, I'll be looking at tiles, electrics, what do you call it? Electrician, all the where to put all the PowerPoints. So tiles, PowerPoints, and then I have colors. And they told me today that that color session is going to be 6 hours long. So colors is everything in the house, really. Outside, what do you call it? The bricks and the roof, colors of the driveway, everything. So most of the decisions when it comes to the house are going to be in that 6 hours, what they call the color section. Anyway, so I'm not looking forward to that day because spending 6 hours, wowzers, trying to decide. Anyway, so I do need a little bit of cash just to have a bit of liquidity, but I am thinking if we do see the market drop a fair bit, which will be very fortuitous, by the way, very, very fortuitous for me, that I'll take use of my margin loan, also have my parents. So my parents have a fair bit of money, and I've been thinking they not lend me money. What I would say to them, they don't know this, haven't told them yet. So if they're watching this video, they might be in surprise. But I have been thinking, and I suppose I haven't told them yet, this is my thoughts because I haven't come to the conclusion yet, but I've been thinking they do have a fair bit of money, and what I could do is, and they've got their money in a term deposit, they can do whatever they want with their money. It's their choice. I'm not going to advise them. Worst thing I could do is try to advise them what to do. So what I was thinking, they've got their money in a term deposit earning 4.3%. I could get a loan and have 6, 7, 8% interest on that loan. But what I do is I'll repay them at a 5% interest, and also have a 10%, maybe what do you call it when you perform really well? Give them a 10% bonus. Yeah. So for example, if I have say if I ask for $100,000 and I'm up 34%, I'll give them 10% of that 34,000, which is not much, but still a fair bit. So I'm thinking, and it's no lose for them because they get a better interest than their term deposit, and there's possible, particularly if the market does really well and I do really well, they could have extra on top of that. So I'm thinking maybe doing that, but I do take on all the risk, and I'm willing to do that. I'll never advise people what to do with their money. I'll never become a financial advisor. I'll never become one of those people who recommend stocks. I have my biases, and this is probably the only thing I would do. I will take money from other people and give them a nice little interest and possibly a little bonus on top of it. And that way they're guaranteed a little bit of money and all the risk is on me. I'm willing to do that, but not the other way. Anyway, so I have lingered a little bit too long on that. Let's have a look at top losers, my market cap. Drone Shield down. LGI. Nothing much here to talk about. I was an LGI holder, but I've sold out of that. I sold out of that about 3 weeks ago. That was one of my positions where I decided to sell just so I can increase my cash. You can see, and that's one of the reasons why, share price down 7.5% on $836 of trading. And I think this was a good trade. I'll just have a look at the chart for LGI. I do think this company has potential, but you can just see the share price has been going sideways for about a year. So the reason I bought into LGI because of a nice uptrend here. And then the more I had a look at the company, the more I liked it. But yeah, I don't like it enough to keep a long-term holding in it. Ooh, my US tech holdings did well, except for Alibaba. Oh, wait. Okay, so let's move on to the top 5 stocks of the day. Yeah, went through the top gainers and top losers fairly quickly. Coming in at number 5, we have Mayfield Group. Share price only up 5.7%. A little bit disappointed there. Share price was up over 10% on open or near open. I can sort of understand why a little bit of selling, because the share price was higher not that long ago. So we have seen a little bit of selling. Mayfield secures major new contract. Now, I am a shareholder of this company. It's in my super. So this is one of my longer term holds, even though I wouldn't consider it to be high quality. And the main reason is because of the tailwinds behind this company. And you can see those tailwinds behind this company just in this announcement. So secures major new contract for an amount of $20 million to deliver 18 modular power distribution centers in Victoria for a major data center operator. So they do have a lot of tailwinds in that data center area. Even though that sort of hype has come out a bit, it doesn't mean that those tailwinds have come to an end. They're still there. It just means there's a little bit less excitement in the market. But those tailwinds are still there for anyone to do, or anything, any company to do with data centers. And they've also mentioned somewhere here some more contracts, talking about switchboards and switch rooms, telecommunication projects in mining, renewable and government sectors. So they do have a little bit of money within the infrastructure sector as well. And looking forward, the recent award of the data center contract, along with others secured in other sectors in the past months, has significantly increased our work in hand to $108 million, extending to the financial year 2027. They are confident in its prospects and remain committed to its Australian manufacturing and technology-driven strategies. So it's a more of a longer-term position for me. And yeah, I don't want to trade this because I want to hold it for at least 5 years. So even though I will say most of my long-term holds are high-quality companies, this is one that is not. And I'm more willing to hold some of these smaller companies for longer periods, even though they aren't high quality, just because I do see some value in these companies. So let's have a look at the chart for Mayfield Group. So there's me buying about a year ago, 78 cents. So I'm already up a little bit. You can see another reason, you can just see volatility in this company. And so this solid blue line is just the support line. And this little dashed line at about 96 cents was a breakout. Share price broke out when they released, must have been 20th of January. I can't remember what they did, but even after that, you can see a lot of volatility. Share price just dropped from $1.24 all the way down to 80 cents in about 2 or 3 weeks of trading and has recovered since then. So a lot of volatility in these sort of companies because of liquidity. And you can just see, if you go back to 2023, the lack of liquidity. So liquidity is starting to improve for this company. And that's another reason why I like these sort of companies. Small companies, a lot of tailwinds behind them, is because liquidity improves over time when they become bigger. And that's one really big advantage we have as individual investors over fund managers. Fund managers, and you can see, you can hear this just when you listen to Oz Business Call. So many of those people would be off or turned off by Mayfield Group just because of liquidity. But they have a background in working for large fund managers, and large fund managers hate the liquidity or hate the lack of liquidity because they can't get in or out easily. So whenever you hear any experts on Oz Business Call decrying a company because of lack of liquidity, they're talking about from their viewpoint, not from the individual investors' viewpoint. So yeah, keep that in the back of your mind. And also, if you're willing to hold onto a position for a long time, it could be very beneficial because we are seeing that now with Mayfield Group. I've seen this so many times in the past. A company does not have liquidity. Share price goes up and up and up. Liquidity comes. It comes. What's a great example? A great example, Supply Network is a great example right now. About 3 or 4 years ago, no liquidity. Liquidity has really improved. I still hear people say or complaining about lack of liquidity in Supply Network. What's a really good example? I think Intertil is a really good example. Intertil. For some reason, this one just came to my mind. If you go back, and this one actually, if you go back a long, long way, I'm trying to remember how far back. Yep, if you go all the way back to 2016, 17, there was no liquidity. Look at this liquidity. Just no liquidity in Intertil at all back in 2017. It's not that long ago, only 7 years ago. And look at the liquidity now. It has improved significantly. And there's no issues with liquidity when it comes to Intertil. None at all. Anyway, so that's one of the advantages we have as individual investors is we can hold illiquid companies, and when most fund managers can't. Okay, it's Mayfield Group. Coming in at number 5. Coming in number 4, we have Gold Road. Share price up 15%, was it? 14%. And I just did see this. I was like, oh, wow, what's happened? And they had a takeover bid. Receipt and rejection of NBIO from Goldfields, non-binding IO offer, non-binding indicative or indicative offer. I think that's what it is, non-binding indicative offer. Let's see how right I am. Where is it? Non-binding indicative proposal. Well, offer, I suppose. They've rejected it. Said, piss off. Go jump in the lake. That's what they said to Goldfields. This is an opportunistic takeover bid. So this is exactly what management should do, I believe, in my opinion. Now, the takeover bid price was $227. And I thought, oh, the share price of Gold Road must have been below 227, and the share price before today was 245. Okay, so to be honest with you, the decision from management wasn't that hard, was it? Wasn't that hard at all to say to Goldfields, piss off. Your takeover bid was well below what the share price is. I just don't understand the rationale behind this. After careful consideration and engagement with Gold, am I reading this wrong? It says here the offer received on 7th of March, the share price was $255 at that point. The offer, acquisition of 100% of the shares on issue in Gold Road by way of arrangement for $227 per share, or plus a variable cash amount equal to the proportionate value of each Gold Road shareholder's interest in the shares that Gold Road's hold in Grey. So is there what? They don't know probably. Oh, that's interesting. I didn't read this bit. Gold Road views this behaviour of a joint venture partner which Gold Road invited into Gruyere in 2017 as extremely disappointing. Yeah, anyway, so Gold Road's management has told Goldfields to get lost, which are exactly what they should do. And yeah, if I was a shareholder of Gold Road, I'd be ecstatic with what they've done. And look at the chart. Why would they accept? Look at gold prices. Why would anyone accept being taken over right now? Geez, no. This is when you don't be taken over. This is when you just want to you just ride the gravy train at this point in time. Anyway, so that's Gold Road. That's why the share price is up today. Failed takeover bid from Goldfields. Pretty sure it's South African. Coming in at number 3, we have the first of the 3 some very small companies called BRX Silica. Is this right? I don't think this is right. It's not VRX. I wrote it down wrongly here. I put VRX and I'm pretty sure it's something else. Let's go back to top gainers. Why did I put I put VRX and it's BRX. I must have just been thinking for some reason VRX Silica. I don't know why. But anyway, BRX, Belararox, share price up 115.4%. Yes, 115.4%. A pretty good turnover as well, volume of 12.6 million shares. So obviously they must have released something. Yes, of course they did. And this is another copper hit. Visual copper mineralization intersected at Tambo South. Is that in Queensland? Tambo is Queensland. I'm assuming this might be in Queensland. Could be completely wrong. I don't really know how to read copper results. Currently, the second hole at Tambo South, currently at a depth of 729 metres for a planned hole depth of 1,300 metres, with the main geochemical target depth yet to be tested. Fairly deep, it looks like. Not always the best sign, but the market loves it. And, oh, it's in Argentina. There you go. Argentina, San Juan province. Anyway, so, look at the visual. You can see a little copper in the visual. Yeah, that's what it's on about. Bit of copper. Not big, but I suppose that is a bit of copper. What's PY? What is PY? CC coatings? CC is Supergene Chalcocite. Supergene Chalcocite. What the heck is that? That's what I'm hearing you say. Supergene chalcocite refers to the copper sulfide mineral chalcocite that forms in the supergene environment of copper deposits. Okay, you can tell I'm not a geologist or anything like that. I had no idea, didn't even know that word existed. And what is PY? I'm going to look really silly when I discover what PY is. I'd see no mention of PY anywhere here, yet they have it on this. That's really bad. They have PY mentioned here, but I can't see PY. Oh, there it is. Sorry, it's just above Supergene Chalcocite. Pyrite. So that probably has something to do with copper as well. Pyrite, also known as fool's gold. There you go. Naturally occurring iron disulfide mineral with a brass yellow metallic luster, often mistaken for gold due to its similar appearance. Well, that's interesting enough. Fool's gold. I've heard of fool's gold, but not pyrite. Anyway, let's have a look at the chart for Belararox. Belararox. And, ooh, interesting. Yeah, so share price hit a downtrend, and all of a sudden we're seeing the share price pop up. Not my favorite looking chart because the share price was at these levels not that long ago. So we're talking about 4 or 5 months ago, 5 months ago, the share price was at these levels. But this could be the turning point for Belararox. Interesting name. Coming in at number 2, we have RareX, limited, share price up 175%. Discovers high-grade gallium at Cummins Range. I'm assuming that's in WA. Again, gallium, know nothing about. They could put numbers here, whatever numbers that it is, and I would be like, sounds good. I don't know. Historic drill holes contain values of up to 6,826 grams per ton. Is that good or bad? I have no idea. Significant gallium intercepts, and yeah. Yes, I actually did. Cummins Range is in Australia. I actually did Google gallium before I started recording, because is this like the first gallium announcement I've ever seen, and is important. It's a key element in producing high-speed semiconductor chips, LEDs, and solar cells. Ooh, sounds really important, doesn't it? Making it vital for electronics, telecommunications, and renewable energy applications. But there's more reason why it's important. Hopefully they mention it here. They do not mention it here at all. It's Chinese dominated, if that's a word. It's critical. It's a critical mineral. Critical mineral. And hopefully AI says something about this. Semiconductors. Well, they do not mention here either. Look at that. CSIRO, critical minerals acquired cheap as gallium and germanium. Yeah, so gallium is really important. And I just, China. Maybe I'll just do critical minerals. And I want China being mentioned. Here we go. China's dominant. China is the world's largest producer of gallium, accounting for roughly 98% of global refined production. So yeah, it's a critical mineral because it is so important. In early December 2024, China announced a ban on exports of gallium, germanium, and antimony to the United States, citing national security concerns. US response? So obviously, gallium is really important. So I haven't really thought about gallium at all. And then I saw this announcement. I thought, oh, gallium. So I had a look at that. And share price up 175% for RareX. And the chart, I did have a look at the chart as well. And the chart looks pretty good. So this is actually a better looking chart. I don't mind this chart. Share price reached a high of 2.5 cents today. And that is almost the highs we saw, just above the highs we saw back in May of last year. So share price is almost at a 1-year high. And look at the volume, really big volume coming through today. So this, again, could be company changing, the turnaround for the company, because before this day, RareX chart looked absolutely horrible. So this could be an interesting trade. Could be an interesting trade. The stock of the day today is Saferoads. I don't know anything about this company. I'm assuming they do stuff to keep our roads safe. I don't know. I don't know why I think that, but that's what I'm thinking. Share price up 351%. Something must have happened with this company. Now, look, turnover has been fairly low, but they sold something. Sale of road safety rentals for $10.8 million. Now, what I'm going to do is go back to the most recent Appendix 4C, and I probably should have noticed this company. In fact, I do have a list of all companies, all quarterly report companies that I want to take a closer look at. And I'm going to see if Saferoads is on this list. I will be disappointed in myself if it's not. I have not had a look at any of these companies yet. I even have BSA on this list, and I don't need to look at that company anymore. BSA or Rob, get rid of that one. There's no point in me doing this because we're almost in Appendix 4C season again. So I do not have Saferoads in this. In fact, when did they release their announcement? 31st. Oh, I've got to look at the page. SRH. Nope, I don't. I have all these other companies that I say who cares about, but not Saferoads. Why am I saying that? Because I had a look at this just before I started recording, and the company is actually cash flow positive. I was like, wait, this company's cash flow positive. And not only that, for the year or 6 months, they were cash flow positive by $1.3 million. They have a little bit of debt. That's not a big turn off for me. They don't have a lot of cash on hand, by the way. So, in fact, negative cash on hand, which is interesting in itself, which means they probably have a little bit of debt. And yeah, unused financing facilities at end of quarter. So they've utilized $2.5 million of debt, and they have available $1.8 million of debt. They did mention in the comment section or the commentary section, they were talking about, where is it? Potential sale of the road safety rentals business. So they actually mentioned this was happening. So why is the share price up so much? Well, they've sold this, a particular road safety rentals for $10.8 million. The markup cap of this company before today was like $4 million or something ridiculous like that, which may not be ridiculous. They're $5 million. So the cash on hand was twice as much as the company was worth. Well, maybe not, because there's a little bit of debt. So that's why the share price is up, because they've sold something for $10.8 million. And obviously the market did not think the company could get that amount of money from this sale because, the share price has rallied. Look at the chart. This is a liquidly traded company. Maybe that's why I decided not to have a closer look at Saferoads. Maybe more liquidity now with the share price up 350%. But the share price, I'll be honest with you, share price has really dropped a fair bit. I'll be honest with you, this is so illiquidly traded that, in fact, let's go back, trade history. So last time shares were traded in this, in Saferoads, was 20th of December, 2024. Was this company in a trading hold? No trading hold. So it's just no liquidity. No liquidity. If you wanted to sell your shares in this company, you had to wait until today. In fact, the last time shares were traded in this company was the 20th of December, and before that was the 28th of November. So the liquidity has really dried up in this company, and maybe this will be a shot of liquidity into Saferoads. So that is the stock of the day. Saferoads share price up 350% on the back of the sale of one of their parts of the business. And obviously the markets just went, whoa, that's a lot of money for a company that has a markup of $5 million and enterprise value of $7 million. Yeah, and that's why share price is up. Okay, so that's all I have for the top 5 stocks of the day. Now let's have a look at this particular comment from Impermanent Being. Quality and growth are completely different metrics. And Oliver Minchin says, agree. Okay, well, you can have your own opinion, your own definition of quality. I have my definition of quality, and for me, growth is an important part of quality. And the reason I say that is the targets or the goals as an investor is to grow your capital and protect your capital. Now, you might say, well, the true quality, or my definition of quality, is sustainable earnings, or not sustainable, what do you call it? It's consistent earnings. So it doesn't go up and down like a yo-yo, sort of like a cyclical company. So that could be your definition of quality, and that way you can protect your capital. But for me, growing your capital is just as important, unless you're a retiree, as anything else, particularly if you're younger. And the best way to grow your capital is for a company that is growing significantly. Maybe not significantly, but just growing at a really good rate. And in my opinion, that is a quality company. It needs to be growing for me to even think about investing in that company for the long term. It needs to be growing. And why does it need to be growing? Because if a company can't grow, what's the next thing that's going to happen? It starts to decrease. It starts to die. Very slow path to death. We have seen this through history. Companies grow and then they start dying. And history is just filled with big companies that have just gone bye-bye. If you go back 100 years, look at the biggest companies 100 years ago. None of those exist anymore. Even if you go back 20 years ago, the biggest companies right now were not big 20 years ago. Well, some were. And the biggest companies 20 years ago have faded. So the first step towards that fading path is lack of growth. So companies, in my opinion, always need to be looking for growth. And by my definition, that means they need to be growing revenue, earnings, and all those sort of things. Because if they can't, in my opinion, they're not growth companies. And another reason why, is if you look at the returns. So again, whole point of being an investor is to grow your capital, protect your capital. And if you have a look at any company that is growing, or the returns of any company that is growing compared to any company that is not growing, you'll see a massive difference in the returns of those companies. And I did this exercise with CSL and Telstra about 4 years ago. If you invested in those two companies in 1998, and I would almost guarantee you, most people would say Telstra is a quality company. Why? Its revenue is going backwards. It's not growing. And if you compare the growth, if you compare the capital, if you put, what was my video? Telstra versus CSL. What was it? I can't remember what it was called. Here it goes. The power of compounding, stock fight, power of compounding, Telstra versus CSL, November 2, 2021. I still remember this. The returns for Telstra are significantly less than returns of CSL. And at that point in time, the dividends in Telstra were significantly greater than dividends in CSL. But by far, the better quality company, based off returns, was CSL. So that's the reason why I believe, in my opinion, by my definition, quality needs a growth element. Now, you can have your own definition of quality. That's great. Have your own definition of quality. But I do think the growth should be considered. At least you should consider growth as one of your quality factors. That's just my opinion. You can do whatever you want. That's just my opinion. And so quality is very important for me when it comes to, growth is very important to me when it comes to quality companies. I need to see growth. Anyway, so we disagree, but that's okay. And in fact, if the majority of investors disagree with me, that's better for me. I'm going to say that again. If the majority of investors disagree with me, that growth is not an important factor to look for in quality companies, that's better for me. That means quality companies, what I define as quality companies, will be cheaper, better value, and that's going to be so much better for my long-term returns, because my long terms are going to be significantly better than yours if you don't factor in growth when it comes to your quality companies. And by the way, for quality companies, I want to own those as long as possible, to take what is the word I'm looking for here? To take advantage of that growth, and because compounding is so important. And the other thing is, you don't get compounding for companies that aren't growing. There's no compounding. Very little compounding. You get a small compounding when it comes to dividends, but for growing companies, so compounding is massive amount of compounding for growing companies. So again, that's very important for me. I want to see compounding for companies I own. Anyway, hopefully I've made sense and made myself clear why growth for me is a very important factor or feature of quality companies. Anyway, so if you have any questions, any thoughts, and by the way, I want to say thank you to all those who mentioned Opthia. Response status. Let's have a look. So Rick Thillian says, Michael, seed clouding. No, seed clouding is not controlling the weather. I'm sorry to disappoint you. Here we go. So Greg Gamer, he just mentioned, have a look at the Opthia announcement today. That'll explain. So thank you for Greg Gamer, because that's when I had a look. And someone else mentioned Opthia as well. Oh, here it is, PTB Fund. Regal Partners has a 30% stake in Opthia. So a few other comments as well, but those are the two main ones. And if I don't see something if I miss something, I'd love for you to write a comment about it, because I will have a look at comments at about, or just before I go to bed, because I want to get rid of all the spam. That's the main reason I have a look at comments every when I go to sleep, and then when I wake up, I look at comment section, because I get or have to delete about 2 or 3 spam comments per day. It's annoying as heck. Okay, that's all I have for today's video. If you have any questions, any thoughts, leave your thoughts in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.